Welcome back to the Bitcoin Fellowship, a show for doctors, professionals, and skeptics doing the math on a broken system. Every week, we dive into Bitcoin, medicine, and the cost of staying asleep. In this episode, Adam and I catch up on the latest in Bitcoin, AI, and Strategy's newest preferred equity, Stretch. If you enjoy this conversation, hit subscribe and check out our previous episodes. We've got more docs coming on the podcast soon to share their journey into Bitcoin. As always, nothing here is financial or medical advice. Do your own research and enjoy this week's discussion.
Welcome to episode 4 of the Bitcoin Fellowship. It's Adam and Chris. Excited to talk to you guys again on another Monday. We got Chris coming live from the call room tonight, which, you know,
yep, I'm on duty. So if there's an awkward pause in the middle of this, like weird edits, then I got called into action. I'll be back as soon as I can.
Started off, we're at 119,500. That's the current Bitcoin price. So
we're recording on Sunday night. Block height is 907,481, and we're about to break 120,000.
I think every episode that we've recorded and cumulative weeks, the Bitcoin price has gone up.
It has. So we have to keep it going.
There's a lesson in there. I think one of the biggest things, we obviously got to talk about the Galaxy digital sale of 80,000 Bitcoin into the market. For those that don't know, there's 21 million total Bitcoin that'll ever be in existence. The last time that this amount of Bitcoin was sold into the market actually kicked off a bear market.
Yeah.
That was the last cycle. So 80,000 Bitcoin were sold in the course of this past week, and the Bitcoin price dipped from like 117.5 down to 114.7, I think was the lowest wick. So roughly $3,000 to $4,000. And by the end of this weekly close, which will be tonight, Sunday night, the Bitcoin price is now up to 119.5. So it absorbed that entire $80,000, sale of Bitcoin into the market.
Yep.
I don't know how you don't say that that's bullish and that this is a mature asset.
And they sold it in one go, like one button push, apparently. Or like a very compressed, like poorly run algorithmic sale.
I think that's the big thing that I think of when I think of this is that A, the demand is so big that that's getting bought up and it really doesn't affect the market. And B, this is shifting hands to, who's buying that? It's the strategies, it's the Bitcoin treasury companies. It's like the big whales that are buying this Bitcoin and holding it. That's not going to get sold.
No, it's going into stronger hands. Interestingly, that was a very strong hand that sold. Like you can track coins through on-chain metrics, and that was like a Satoshi era, like true OG Bitcoin whale. And they sold it, and the press release from Galaxy was something about estate planning.
Yeah.
So number one, I think we talked about in our group chat, like presumably that person has a lot bigger stack somewhere else that they're keeping. Like, I want to know, like, pick their brain, be a fly on the wall. Like, why did they sell? What about estate planning?
Yeah. So if you held Bitcoin for that long, obviously, the inherent value, right? Because they didn't sell at 10,000, they didn't sell 50,000, they sold 115,000. They obviously have some other Bitcoin that they're holding. The question is like, well, now there's all these assets that are available to you that have more liquidity and can put that value to use to improve that quality of life. Because at the end of the day, Bitcoin is a tool, right?
But more liquidity, like they sold $8 billion in like an hour and did nothing to the market.
Yeah. They could be buying Stretch,
They could be, yeah.
So, some of these products that are coming out, they just want to lock in, 8 billion and then put that into essentially a 9% fixed yield. Live off that,
Or I'm thinking, is there taxes they're looking to pay at like their estate transfer? But like, if you have that much Bitcoin, surely you have someone advising you and you have a trust that is going to mitigate some of that estate tax. But I don't know. Whatever the reason it is, it's very bullish. The market, it didn't even fully blink. Like it like thought about blinking and then it was like, no, up only.
Yeah, I think that we'll never have all the information that goes into that, so you always be kind of questioning. But I'm sure there was a perfectly logical reason that it made sense for that individual, and I can guarantee you that was not all of their stack.
Yeah, the bottom line is it doesn't matter, right?
Yeah, it doesn't matter. The market absorbed it, right? It's better off.
Bitcoin is agnostic; it doesn't care.
Hopefully, 80,000 other people get a chance to be whole coiners, even though the strategies of the world and they're just snapping them up like a Thanos snap. Is whole coiners vanishing.
It is, yeah. So that sale increases the realized cap. Like all those coins now have a higher realized price,
right,
than when they were bought. So I have to go look and see what the total realized cap recently hit $1 trillion, which is a big deal for people that follow on-chain stuff and a big deal in general. Like meaning that people have clicked the button to send $1 trillion of fiat into the Bitcoin network to trade it for Bitcoin. Like the market cap is whatever the marginal price is multiplied by 21 million coins.
Right.
The realized cap is how much people actually transacted to get the coins that are circulating or have been mined to date.
It's only going higher.
Yeah. So that was a big chunk. I'm sure has a measurable effect on the realized cap. Checkmate tracks that pretty regularly, and 1 trillion was like a big milestone that he's been tracking for a while. He called it pretty closely, like within days.
Yeah, Chuck's always got the best stuff to follow. His
Yeah.
newsletter's phenomenal.
Yeah.
And he's super
we're going to
bullish
talk
right
a
now.
little bit later.
Yeah.
Other news, PNC Bank came out. They're offering native Bitcoin and crypto trading via a partnership with Coinbase. Big news. PNC Bank, I don't know what their market share is. Like I would say they're not the strongest household name, but like you recognize their logo, you recognize their name. What do you think about that?
No, I think you just watch and see what the banks are doing, right?
Yeah.
There's a reason that like every bank you've started to heard of is now buying Bitcoin or finding a way to accumulate Bitcoin on their own balance sheet or making it available to their customers.
Yeah. Like they just had so much more clarity given the political environment and the
all the legislation that's being passed
and all that. Yeah.
I think this is going to be a very, very big week. I think that almost could have been, maybe we should cut this back. That's what we should have led with, because there's so much exciting stuff that's coming out. We're going to have all the Trump news with him supposedly announcing what their strategy is going to be for the crypto, accumulation and the Bitcoin strategic reserve. And then you're going to have strategy earnings to cap it all off on Friday.
Yeah.
When they announced 14 billion in earnings in a quarter, and I think the last I checked, they're estimated to lose 9 cents a share. They're only off by
that's the analyst their best guess, their best financial analysis is that they're going to lose 9 cents.
That's a wide margin of error there.
I'm trying to see. Someone had posted like a basically everything we care about weekly thing, but yeah, strategies earnings come out this week. The crypto summary comes out this week. Something else happens tomorrow. I think is there a Fed meeting tomorrow?
So, yeah, sometime. Well, there's always talk about cutting interest rates,
Yeah.
I don't even.
There's a lawsuit against the Fed that they're a government agency and that they have to make everything transparent. I think there is a hearing about that tomorrow.
And Trump handing Jerome Powell the paper that he's,
that
was it 500 million or something in the unaccounted for in the Fed building.
The memes that came out of that immediately were just gold.
It's funny that memes drive the information flow now.
Yeah. I don't keep up regularly with Saturday Night Live, but I'm sure that has to have been on this week or next week's episode.
Yes, it was good, man. It's funny to watch. I'm sure there'll be even better ones.
For PNC Bank, interestingly, we watch NASCAR in our household, America. But they were like a title sponsor of like when there's a commercial break, like they show the racing at the top and they show a leaderboard, and they have an ad in the bottom right corner, and it was PNC Bank was doing like a whole block of commercials. And their like new branding thing is like bright orange and white. I'm like, oh, Bitcoin. Like I just am drawn to orange. I look at it. It's like PNC Bank, brilliantly boring since 1864 or something. Like really? That's their slogan. And now they're like the first, recognizable bank to accept crypto or like make crypto trading and Bitcoin trading native to their. Basically, you log into PNC Bank online banking and you can buy Bitcoin through Coinbase in the same login.
Well, 119,000 does feel pretty boring at this stage, which is wild to think of, but. When it's going up forever, it's just going to slowly bore you to death as it goes up. I think that's honestly what's going to happen.
Do you think it's boring because the vol is down? Like we're not getting the price swings? Or I personally think the unit bias has like every average Joe you talk to on the street, like here's about Bitcoin, but it just seems so unattainable now that they're just like, don't care.
I think unit bias has to do a lot with it, right? Like there's very few people are like, oh, I'm going to go try and buy one Bitcoin. And the whole point of this podcast is like, you don't have to do that. Like if you buy 0.01 of a Bitcoin or you set aside 0.1 of a Bitcoin for your kids, eat 0.1 for each kid, that is going to accrue value the same percentage wise as like one Bitcoin. And they're both going up forever. So the important part is just get off zero and play with some money in there, and you learn how it works and you experience the number go up. And that builds your conviction. It's a cycle that all of us Bitcoiners have gone through personally.
Yeah.
And you just have to do it. You just have to get off zero and experience it. And then you go down the rabbit hole and then you're orange pilled and all of a sudden you're orange pilling others.
Yeah.
And
that's why people always bring you XRP, because it's like 30 cents or, it peaked at like 30 cents this week or something. Like people are like, oh, if it goes from 30 cents, if it just goes to $3, then I'm like,
it's like $3.50 or something like that, at $3.30 or something. So it is actually like multiple dollars per coin, but people don't understand the market cap.
Is it really that high? Why did I think it was 30?
There's so many coins. People don't understand the difference between Bitcoin and all other cryptos is that Bitcoin doesn't have a central entity. It doesn't have an owner. There's not a CEO that's selling you coins. They're not making more coins. So like Ripple and Garlinghouse that are literally every coin that exists on the market was sold from Ripple.
Yeah.
Like that's the definition of like a central bank digital currency. It's like they just print more and issue more into the market. Like you don't even, when you talk about these market caps and you hear these people talk about these valuations of multiple hundreds of dollars per coin, they don't understand how market cap works.
Yeah. That would be like dozens of
It's
trillions,
like more trillions
hundreds
that
of trillions
exist
of
than
dollars.
are in existence in the capital market.
Yeah. It's not going to happen. Not going to make it.
Well, they'll just issue more coins. They're
Yeah.
capitalizing off you. That's how they make their value. Bitcoin works for you. You work for XRP.
100%. Somehow some XRP like kind of scammy accounts end up on my For You for like Twitter, and I watched a couple minutes of it. I'm like, this is just
There's
so...
always going to be that. I mean, being a medical podcast, I always joke that it's always the ortho reps in the room. You know, when I'm trying to orange pill somebody or we're having an intelligent, high level Bitcoin conversation and talking about, you know, I'll be talking about strategy products or the newest Bitcoin treasury or some of these news that we're covering. And then it kind of lulls for a second, and then you hear the ortho rep in the back. It's like, what do you think about XRP?
But I mean, think about this, a counter argument. So like they're around people that have ultra high net wealth, they're high income earners, and they're talking about like expensive vacations on private jets. You can't own part of a private jet. Like you can't have 1/8 of a flight of a private jet. So if you're out of that club, out of that circle, then you look at unit bias is why you look at something that's cheaper. You're like, oh, I can get on this and I can grow it, and then I can be in the club and taking like Bitcoin is the private jet. It's the high value thing that they think is unattainable.
Yeah,
it's an education thing that they don't understand, that you can buy fractional parts of a coin.
Well, that's the difference between digital capital and physical capital.
Exactly.
Right? As I think people don't understand that unit bias has always predominantly existed, right? It's hard to own like a portion of a gold bar or you know, a portion of a car, like you mentioned. And people think, I can't get to one Bitcoin. It's not worth it. Like, it doesn't matter if you own one Bitcoin or not. Eventually, everything's going to be priced in Satoshis anyway.
Yeah.
So, like, that's not going to be the unit of count.
Yeah. All right, we're getting sidetracked. We spent way too much time. We said XRP too many times. It's like Garlinghouse is going to show up like in the corner behind me.
If one of us disappears. You know?
All right, JP Morgan offer crypto collateralized loans. I don't have it. There's no date for that, but they came out and said it.
And then I think the other one we didn't talk about too was Fidelity. Didn't they mention like in-kind redemption recently coming out in the last week?
Didn't add that to the list. But
I think that's the other big thing is there's so much stuff that's evolving in this space and happening so fast that the average person, like we're on top of this all the time. Like, this is all we're listening to. And it still seems like there's just like information overload. It's like back in med school again, and you're drinking from a fire hose with all the newest Bitcoin news.
Yeah.
I can't imagine being the newest person. It's like, I don't understand what that means. You know, what is this treasury company doing? Like you mentioned, PNC Bank is starting to, there's so much that you just kind of like turn your brain off, but that's like the exact opposite of what you should be doing right now.
But it's all like very strong, positive news for adoption, like big names, big money, forever generational dynasty level institutions are acknowledging Bitcoin as a real collateral asset. That's the takeaway. Like the TLDR, I don't understand Bitcoin. I don't know what you're talking about. That's what it means.
I just, I got the chance being on vacation recently to reread the big print. And obviously Larry always does a good job of reinforcing conviction. And I thought one of the interesting things was putting this into comparison to Stretch, and not to change topics too much, but Stretch is Strategy's newest preferred product. That's basically like a high yield savings account where the whole goal is to strip the volatility away from the instrument and just give it a fixed dividend on a monthly basis. And they're shooting to keep I think the IPO price is around $99, and the goal is to keep it anywhere from 99 to 101. So basically no volatility to the stock and yield 9% on a monthly basis that's cumulative for 9% over the year.
And but it's floating every month. It's at their full discretion. It's not. And Jeff Park just did a live spaces that right before this, talking about how it's not pegged to anything, which is interesting. It's basically just a credit spread on Strategy's creditworthiness, which I thought was interesting. It's a very interesting product that everyone is learning about in real time.
Well, the demand's only going to increase when they do. That's how the torque of all these products works together, right? People haven't heard. There's MSTR, which is the common stock, and then there's Strike, Strife, Stride, and Stretch, which are the 4 preferreds. And all of these work together in tangent to basically create this yield curve for Strategy, which is the number 1 Bitcoin treasury company in the world. Yeah. And this is how Bitcoin takes over each of the capital markets and just Trojan horses his way in to bring all that capital into Bitcoin. Yep. And all of that, what that does is increase the creditworthiness of Strategy's balance sheet. This is why this is the biggest story in finance, as Punter Jeff says, and it's not being talked about at all. Yeah. We're officially segueing into like our catch up on YouTube for the week. Yeah. I mean, stuff on the list wasn't super important, but so this is all what True North episode 34 was about this week, was Stretch, an offering that you've already given a great intro to. And I think the thing I really want to get at is like kind of putting this in perspective. Stretch has that 9% yield, right? If you just give it that, and that does have credit worthiness, and you believe in Bitcoin, with that 9% yield, you're getting S&P returns with basically no capital risk. There's no principal risk at all, which is wild to think about. It's like people gamble in the S&P 500 to try and stay above inflation and like the safe asset, but you do have capital risk. There are times and years where the S&P will go down 10%.
Yeah.
Here's a product that is keeping your principal protected and yielding you 9% with all the Bitcoin volatility risk stripped away and given to the
it effectively can't go below zero, right? I mean, your capital, if it works how they're expecting it to work, and I think
it's not going to go below that $99.
Yeah.
Right. So they're keeping it. There's no volatility there. They give it all to the common stock shareholders that want all the Bitcoin upside.
Yeah.
So between $99 and $101 is where that preferred is going to live in perpetuity with that 9%.
And it's going to pay a monthly dividend. It's cumulative, so they can miss it and they have to repay it. It's at their discretion. I don't think there's any scenario where they would really not pay it. But if they miss it, then they're going to pay you interest on it. And then it gets into, if it's that consistent at holding value, and we fast forward a couple years, probably sooner than that, but let's say fast forward a couple years to where all these equities are tokenized, like you can trade in 24/7 and do fractional shares and things on like your Robinhood account.
Yeah.
Does this become a stable coin with yield? Maybe.
Well, why would you go invest in the S&P 500 when this exists? If that's like your savings in retirement and you're gambling there, right? It's going to go up 12% one year and down 8% the next. Why wouldn't you just take a fixed 9% yield? If you're the most risk averse investor, this is the product for you.
And interestingly, there was some language around this in the Genius Act, like part of the bipartisan support of passing stablecoins is the banks lobbied that non-bank issuers of stablecoins can never pass on yield to the holder. Can never.
Interesting.
So like one of the podcasts, I think it was Pomp and Jordy Visser were talking about. So that means by the inverse, that means the banks want to differentiate themselves by having their own stable and giving you yield. Well, strategies beat them to that in a way. And theirs is interoperable. Like you can take that stablecoin in the yield and move it anywhere. Like if you buy JP Morgan stablecoin and want to get a yield, Chase isn't going to take your JP Morgan coin, but they'll take Stretch as collateral. You know what I mean?
Well, it's because everything is built on Bitcoin.
Yeah.
Right. The pristine collateral. That's the important part that you see all these other treasury companies. And for those that are new to the crypto space, there's infinitely abundant number of crypto and then there's Bitcoin. And that's the difference between the two. I want anybody that's interested in this stuff, just make sure you educate yourself on why Bitcoin is different than any other cryptocurrency, and you'll see why it's pristine collateral compared to everything else. And that's why the credit worthiness on companies like Strategy will be infinitely different than companies that are built on Ethereum or XRP or Dogecoin or whatever. That you're going to see this stuff come out, and I think a lot of that stuff is, I'm sure it will surge when we have an altcoin season or throughout the next bull market. But when you get into that bear market, a lot of those are going to crash in meteoric fashion.
Yeah. A lot of the Bitcoin treasury companies, you mean?
Or no, I'm talking about the other crypto companies.
Other cryptos, yeah, because they're not the fundamentals aren't there. Like they're not secure, decentralized with a fixed supply,
finite amount, ultimate digital scarcity.
They're pre-mined. They have centralized control, and usually it's like an insider group or an insider founder that's just selling the coins in the market. That's the liquidity.
Yeah, you become the liquidity.
Yeah, I mean that's the flow. The flow into the market is them just selling pre-mined coins.
Yeah, I mean, I think the important thing is like look what the smart money is doing. There's a reason that like all these bigger institutions and bigger banks are building Bitcoin treasuries. Yeah.
And this Stretch getting back to MSTR and Strategy and Stretch, like Stretch in their announcement of it, they like very clearly said they're looking to actively retire all the convertible debt, which is the most senior in the capital stack. And this is a reiteration of what they've kind of said and beat around the bush, but they're pretty clearly moving away from convert season.
Like I think they so much have said they're not going to do anymore. It doesn't make sense for accretion.
Which is interesting because like Marathon, which is a mining company that's gotten into the Bitcoin treasury space, meaning they're trying to increase their Bitcoin per share more than just mining and taking that arbitrage. They just did a 750 million, I think, convertible. It's unsecured, which is good, but it's interesting.
Yeah, I think getting back to True North, I like what Ben said in this past week. Again, I told you I was up to date. Is the big thing for all of these instruments is the size of the ATM. That is essentially the size of the torque or the gear for each of these preferred products. And he's very interested because Stretch has the potential to be a huge gear in this cog flywheel that is Strategy.
Yeah, right? It's an easier sell and it taps a whole new pool of capital, right?
Yeah, it's a high yield saving account giving you 9%.
Yeah. Built
on the highest creditworthiness asset that exists.
Yep.
Who doesn't want that?
We were talking last episode, I think, with my dad. The best one we'd found right now was getting 3.8% in River in Bitcoin.
Yeah, with the lowest, it's all about risk tolerance, right?
Yeah.
So that's what we're getting at. This basically has virtually no capital risk.
Mm-hmm.
So where's all that when people start to figure this out and they do start to give Strife and some of these other products high credit ratings, Stretch just goes through the roof, and they're going to want to keep the value. They're going to be able to issue ATMs on that.
Yeah.
And generate Bitcoin yield. This is how the whole Torque system brings in more and more Bitcoin into the strategy system. It just converts all this fiat dollars and all the different capital markets into more Bitcoin on Strategy's balance sheet and increases their creditworthiness even more.
Yeah. Let me ask you on creditworthiness in this instrument, because it's kind of the inverse of what we've seen before. Previously, with the other preferreds, they're all similar in the fact that they have floating share prices, so that if the creditworthiness increases, the credit spread shrinks, and the price of the instrument goes up. So there's capital appreciation built into those, right?
Yes.
This one, the capital price, the price of it is locked, and what moves is the interest rate. So what happens to the interest rate or the yield that they're offering as their creditworthiness goes up? It should demand it'll get a higher one, right? Because if you think they're more creditworthy, then you trust them to pay more. Like as the yield goes up, as their percentage increases, you trust them more to pay it. Or am I thinking of that? Is that not what really happens? I don't know.
Well, normally those are inversely related, right?
Normally they are, but this one, the capital's locked.
Well, I think that the whole goal will be for them to essentially like issue ATMs on that, right? If like the price is going up, they're going to bring the price down to keep it around that. The peg that they're picking is the yield rate.
Correct.
Right.
So I guess,
Whereas the floating thing for all the other products has been, so the yield is floating.
The creditworthiness just drives demand. It doesn't really it shouldn't affect the yield, because the yield is the primary lever that's affecting the price stability. So I'm thinking about it wrong. You're right.
Yeah, it's the inverse of the other products.
Kind of, but the yield doesn't really care about creditworthiness. The yield is a tool to keep it in that tight band of price. But as creditworthiness and like everything else gets rated, then people recognize Strategy as a reputable issuer of these preferred equities. So it just drives demand towards Stretch.
Yeah, it just makes you realize the risk of like, so like the capital stack being Strife the highest and now Stretch right beneath it. Mm-hmm. It just means that they're going to be even more over collateralized as the creditworthiness appreciates. So that like rare liquidation type of event, there's a much lower risk of that happening.
Yeah. Jeff Parker was just talking about Stretch and saying it'd be interesting that, so Strife will always be the crown jewel, the highest in the capital stack.
Yes.
Assume that the converts all get converted to equity and they go away. Strife is the king, top of the stack. Stretch is right below it. But he was saying the demand for it and like how it's going to trade, it might actually get a tighter credit spread, meaning like it's almost treated as being senior, even though by definition it's not.
Oh, compared to Stripe. Yeah, that is interesting.
Compared to Strife. It can't be more senior, but it will trade like it is.
I guess it just this is again getting back to the size of the ATM and the number of shares that they issue, right? I think they're capped at, was it 2.4? I can't remember if it's billion or million for Strife.
I don't know.
And I think the size with
Strife is very low. Yes, 2.1 billion.
Yeah, and so with Stretch, I think that number is going to be, the total addressable market for Stretch is so much larger, right?
And the demand already has been so high.
Yeah, and that's the reason they were able to upsize from 500 million to, was it
2.5 billion, I think.
Yeah, 5x over what was initially offered. Is bigger than Circle's IPO.
It's the biggest IPO of the year.
And it's a preferred
equity or preferred equity.
Yeah, which shows you that people are starting to understand what he's doing, Saylor.
Yeah.
So
do they release like who bought the IPO? Like eventually that comes out. I guess when the corporates release their like 13Fs or whatever.
I don't know how that works, but
they'll have to disclose it. If they bought a crap ton of Stretch, they're gonna have to disclose it.
Yeah,
it'll be interesting to see. Fast forward a few months, like we're gonna get some hindsight data of who was in that IPO.
Yeah, it'll be interesting to see. It's like you go back and Vanguard doesn't let you buy Strategy on their retirement account, but they're the biggest corporate holder of the biggest equity holder in Strategy itself.
So, but are they holding it on behalf of their investors, or is that them?
I'm sure it's probably on behalf of their investors, but I'm sure they do own quite a bit. That can't be all just all.
I mean, but assuming that they're holding it for their investors, like they're ignoring that there's raging Bitcoin demand in their own customer base.
Oh, absolutely. They had their CEO get fired not too long after that happened, right?
Or the inverse, either scenario. If they're personally holding it in their own treasury, in their own wealth fund, if they're saying no Bitcoin for you, but I'm going to get all this Bitcoin exposure, then they're just purely hypocritical. Either one is bad. They're either ignoring their customer base and like what they're telling them, or they're being completely hypocritical.
Yeah.
I don't know.
I mean, that's a lot
That's
of.
why we both have Vanguard through our employer, but we actively do everything to push as much as we can out of it, just for more
Yeah,
sovereignty and
I think
freedom of choice.
that was between episode 1 and episode 2. That was us talking about like how you get some of your retirement into Bitcoin
Yeah.
exposure. Here, speaking
Yeah.
of that, Chris, I'll change the subject just a little bit so we're not talking about just news. But for the people out there who would just be maybe like watching for the first time and they don't know where to start, let's say that you're like a resident or just starting out as an attending and you want to set aside some money and get exposure, right? The average portfolio managers right now recommending anywhere from like 2 to 5% exposure to Bitcoin.
Mm-hmm.
How would you go about? Would you put money directly into Bitcoin itself? Would you start buying in retirement as well through Strategy or some of the other treasury companies? If this was you looking back and like you were just starting and, you know, could tell yourself.
I think it depends on where you have access to capital, right? Like I talked about in previous episodes, like I had a personal loan and I had the balance sitting there that I thought was going to use for another business. And I wisely decided to just port that into Bitcoin. So that was my initial base of exposure. But like if I didn't have that and like we were in our shoes, like where we got our first like attending job and had saved during residency and you're forced to roll that over to your new employer, like that would essentially be your biggest pool of capital. So by nature of US markets and like what you have exposure to, then I would go to a Bitcoin ETF in a sizable foundation before you got into any Bitcoin treasury type of things. But it just depends on where you're starting from and like where your biggest pool of capital is. And like, if you're just a resident and trying to save money, then see what options you have within your residency's retirement fund. You're usually very, very limited, so you might not have a lot. In that case, if you're able to save outside of that, then just stack Bitcoin, like probably dollar cost average into Bitcoin with your paycheck if you're able to. Take Moonlight, whatever you can do. Once you roll over and get a job, like outside of residency, then you should have some options and more freedom to decide where you want to put it.
Yeah, that's a good point.
But I think we have to catch ourselves because we get so excited about all the Bitcoin treasury stuff because that's where we are in our journey. But you cannot ignore your stack. You can't disregard your stack, which is pure play exposure to Bitcoin, like owning Bitcoin cold storage, number one, as soon as you possibly can.
Yeah.
And having exposure to the ETF if that is not feasible for you.
Yeah, that's the real, there is no second best, is owning pure Bitcoin. And so I think if you can get exposure to that, I kind of touched on this, I think last episode when I said, I think that used to be the common way of doing it, right? Is people would first buy pure Bitcoin, kind of learn what that is. Once you kind of get orange pilled and go through that process, you want more in other types of exposure vehicles, such as in retirement. And then people start buying ETFs and buying treasury companies. I think what's going to wind up happening is it's actually going to be the reverse, because the vast majority of people have most of their capital in retirement and not as much liquid in, you know, their day to day. Unfortunately, the average American is living paycheck to paycheck, right? Which already tells you there's a problem with the fiat system. So I think what's going to happen, and that's part of the reason that Trump and some of the politicians are pushing this to have the ability to invest in Bitcoin and crypto in your retirement, is because he knows that's where that liquidity pool is going to be. That's how people are going to be able to access it. So you're going to see people, where do I look? I agree with Chris here. I think the first thing you start out with is like the safe ETFs, and you learn kind of like what Bitcoin is through that, because that's the most correlated to, you know, 1-for-1 Bitcoin. And then as you understand that, that's when you kind of want to increase your exposure to like treasury companies, and because there's a lot more volatility that comes with that. Right. And you kind of have to get orange pilled to build up the conviction to be able to not mess around with those investments and lose money. Because what happens to the vast majority of people that don't have conviction and don't believe in Bitcoin is they buy in trying to get like flip a quick buck, and then they get smoked on like a 20% drawdown. They aren't convicted in the asset and they sell. And that's like the only way that you lose in Bitcoin, is not having conviction. Yeah. Historically, if you hold for longer than 4 years, you're going to be in profit. You're going to make money on that investment. So your time horizon has to be greater than 4 years, and you have to have conviction in that.
I think it goes back to everything we talk about every episode, which is you have to decide what your goals are, right? Like you have to see what your options are, where you can put your money, and then once you have that foundation, number one and number two, kind of either one, but number one, know what your options are. Number two, what are your actual financial goals? Like, tons of people obviously just work to support a lifestyle, and they don't save anything beyond that.
Yeah, that's a good point.
If you can't get beyond that, then this whole discussion is worthless, and you're not watching the show. Hopefully, if you're watching the show, it's because you realize like I want to save for my future, for my family. Yeah. To one day be able to work less and be financially independent from my job and work because I want to, not because I have to.
Ultimately, gives you more choice in your life. Yeah. The whole purpose of this podcast is to hopefully give you more choice down the line of what you want to do with your life. And we're hoping the vast majority of that is like, we're all docs in medicine, is to take care of people. And we have a unique skill set to do that. And we've already sacrificed enough and already given up enough opportunity costs, as we want to help you with the opportunity cost of not paying attention to Bitcoin. I think even,
go ahead.
I was going to say that the thing I guess I paid attention coming on vacation this week. I was in Mexico and a resort. I'm sitting there for 4 or 5 days. And those first like day or two is like really enjoyable. And like you get to relax and, just enjoy being by the pool and the beach and people watching, talking to people, enjoying your time. And then you start to realize like, what would life be like if I just did this all the time? Yeah. And very quickly I was like, I would lose my mind, and it gets you thinking. It's like, well, what's the purpose of all this? Right. I don't think the purpose is necessarily like to make a ton of money and then you retire and just like, don't do anything. That's how people are unhappy. Right.
Yeah.
I think the answer is that you find like what your purpose is. And a lot of us in medicine have already felt that calling, and we're lucky, and that we've already found that.
Yeah.
The trick is finding the asset that saves your purchasing power so that you can just enjoy doing that. Because by the end of the week, I was like, this is why I always joke with my fiance is like, I would just do anesthesia like part-time 3 or 4 times a week. So I didn't drive you nuts at home, because I legit enjoy doing it. It keeps my brain going. Like, it keeps me, I get to talk to people in the OR and interact with my patients, take care of them and give them a good service, make them comfortable throughout surgery. Like, I genuinely enjoy what I do. And I think that's the important thing to take away from all this is like, Bitcoin is the tool to give you that financial freedom, but it's not the end all be all. It's to make you more comfortable to enjoy the things you care about in your life, not to like,
right.
Because those things are like,
drive a Lambo.
I drive. Yeah. I'd ask everybody to sit there and like fundamentally think like, if you could do anything with your life, what would you do?
Yeah. And how am I going to get to that? And we're here to tell you how we think Bitcoin can help you get to whatever that goal is. Right.
Yeah. And I think for the vast majority of people, it's not to go buy 2 Lambos and own a jet. And like,
no,
that's like, that's unrealistic as it is. I think for the vast majority of people, it's like, they don't want to feel that overhead stress of like, how am I going to pay the bills at the end of the week? Or, we're going on vacation. Can I afford it? Like, I thought about the comment I had some of our partners make, where it's like, when they're on vacation, they feel like they can't enjoy the vacation because it's a day they don't work, that they're not getting paid. So not only are you paying for like a vacation, but it's a day you weren't like in the OR providing anesthesia to have a paycheck. And I thought that was just like that was a terrible way to live. Right. It's like a very fiat.
But we don't feel that way right now because we're currently in a salaried role in our where we are in our career.
Yeah.
I feel like we would feel differently.
It's different when it's built on like your day work is like a day paid type of model.
Yeah.
But it gets you realizing like how much these guys are on the hamster wheel. It's like they felt bad that they weren't on the hamster wheel when they were off the hamster wheel. Does that make sense? Like,
I know what you're saying. Yeah, like you're so, it's like Stockholm syndrome. Like, you're so ingrained in, and not really because they feel like the work needs to get done. Almost, it's more like they just know, you inherently know that you're getting behind because you're not spinning the wheel.
Right. And even my whole point is like, they don't have an asset working for them behind the scenes because all the assets are losing in dollar denominated terms because they're printing more than the assets are going up in value.
Yeah. I think you brought up in a prior show, like docs commonly get stuck in this rut of working to live because we come out with all this debt. You get a good job, your lifestyle creeps to where you're essentially still living paycheck to paycheck. Maybe you're doing the minimum, but
yeah, that's the biggest thing. If I had to respond to that and kind of ask that question I asked you, if I could talk to my resident self, I'd say live like a resident during residency for sure, and then coming out as an attending and build that portfolio with you can understand Bitcoin, understand what it can do for you, because what's happening now for both of us is that Bitcoin is working for us behind the scenes. Yeah, and by the time we get to that point where we are no longer like the way anesthesia works is obviously different than other specialties, but in our specific group, it moves from a salaried model towards more like the amount you work is about the amount you pay type model. And it's not like you're going to have to be on the hamster wheel all the time, right? You get a chance to take your foot off the gas and be like, okay, if I want to have this day off, I'm not going to feel bad about having this day off to spend it with my kids, you know, or to go out and take my wife on a date night or go on vacation, or you pick whatever you want to do, you know, and behind the scenes, your portfolio, that Bitcoin is working for you. And it's going to work harder and faster than any other type of asset that you can own. That's what we're trying to get at, is it is the hardest working labor in your bank account. It works harder than you do.
Yeah. 24/7, 365.
365, man.
Yeah.
Sorry, that was like tangent. But that was all the stuff that was just like.
That was your soapbox. There was a lot of good sound bites in there. We'll clip for teasers, I'm sure.
Well, it's just.
But that was great.
You know, but that's the point of having these conversations with these guys, you know, and I don't know. That's why I think you and I both get kind of worked up. Sometimes I think I get a little bit more worked up about it than you do, but that these people need to know, because that's the answer. It's like, that's what will save you. That's the whole point of orange pilling, right?
Yeah. But I think this segues into this another like YouTube moment that I was going to talk about, is just that I'm really AI like fanatic. Like I love learning about it and what it's doing.
Yeah.
But AI and like the very quickly approaching advances in that are going to make this a reality for everybody. Where like there's just not as much work to be done. There's very few jobs that are going to be shielded from the hyper productivity of AI in their field.
The age of abundance, right?
Yeah.
Like
so what are you going to do? What are you going to do when the job the career you built is just no longer needed? Like I don't know.
Well, I mean, I think you could name anything, but like think about like Uber drivers, right? Like say this guy, it's unfortunate how this probably plays out, and I think this is going to happen at a much faster scale than any of us are ready for. But like when you have robotaxi and full service driving, and you name the company that has the car driving itself, like think how many people use Uber as like a second job to make ends meet. So not only are those people losing a source of income, it's probably not realistic for them to easily go find another job, right? There's probably a reason they're working at Uber in the first place. Like they can get off work at a certain time and they're stuck Ubering at night, right? They're piling in this now a 70, 80 hour work week because that's the time that fits so that they can make ends meet. They're saving in either cash or because they're paycheck to paycheck. They're not putting it into hard assets, and the inflation rate is 7%. That's just like a recipe for disaster. And so that's what I get at. It's like Bitcoin is the savior. Like that's it frees you up for the whole system. And the sad thing is, like, I think it's starting to move so fast that very quickly people aren't going to be on board.
Yeah.
And you got all these big institutions they're not buying. There's just not enough to go around. So you just really want to protect yourself.
Yeah. I think I meant to bring this point up earlier when we were talking, but I thought, I came from a business background and, didn't choose to go make money by working other people's money in the finance sector or anything like that, and became a doctor. Like I'm just going to work hard, have a good job. And like, I will just not do anything stupid with my money and like basically do passive investing, not get emotional, and like work and retire. And like, that's not a reality. That's like why we made this show. Right.
Well, were you born in 91?
My dad talked about last episode.
Yeah. Were you born 91? I'm 92. Right. So millennials, 91. we've around the time of like, I don't know, what time in your life do you start thinking about like, what kind of grown up are you going to be? What is my job going to be as an adult? 8, 10 years old.
Yeah, probably.
When you're like kind of end of elementary school, beginning middle school, you're trying to pay more attention to your grades. You're just thinking about like, where's my place in the world? What can I see myself doing? You're not envisioning that like this paper money that like you don't understand, they're literally debasing at 8% a year. The value has gone down by 50% from that time at 2000 to now. How are you supposed to compete with that? And then I'm kind of getting again on my soapbox here, but this is why Jack Mallers talks about how like our generation feels like they can't win, right? It's the first generation that's worse off than our parents. Yeah.
And we're told like, just stop buying avocado toast and lattes.
Yeah. And here you go. Here's your $25 breakfast for a latte and avocado toast. That's like, what is that? 2 hours worth of your time?
Yeah, it was like somehow our fault that was so expensive and eating into our savings, but no one talks about why it costs so much, right?
Yeah, and that's kind of why we talk about. We can do a whole separate podcast on like how fiat has got here and like why fiat is terrible. Yeah. But there's a reason that our generation, the younger generations, are getting married later. People aren't dating, right? There's a higher rate of substance abuse. People are living with their parents in their parents' basement. That's not normal. That doesn't mean our world is better. We're supposed to be the best country in the world, and that's happening here.
Yeah. I think what we're going to find out is that all this abundance that can see is coming, like just this proliferation of AI and like productivity increase, we're going to hit a hard cap of how much electricity we can generate as a country.
That's a good point.
And that's like the TLDR of like my AI YouTubes for the week, is that we need 85 to 90 gigawatts of new electricity by 2030. It's already almost 2026. So that's like dozens, like 60 plus nuclear power plants worth of energy. We're not going to make it in terms of that.
What are we at right now?
I don't know I'd have to go look up some more numbers, but we are so far behind, and we're so far behind China. Like it's not the chips. Like we already have the chip capacity and like the compute, like the AIs can do enough.
We have the compute, but we just need the power.
Yep. Yeah. Like we're severely limited. We're 100% limited by the power, not by the capability of the chips.
Well, I mean, I think that's, again, I find a way to relate everything back to Bitcoin, but that's the efficient allocation of capital, right? Fiat has got us here where there's so much capital that's misallocated and inefficient.
Yeah.
Hopefully, adopting a Bitcoin standard, and I have faith in Scott Bessent and Lutnick and some of these guys because they're smart guys. They can find a way to use Bitcoin as a way to leverage that into efficient allocation of capital and like drive
But
growth.
it's not just capital, it's time. Like we're going from a software, you can do it overnight thing to like all this hardware and like infrastructure we don't have. And we're going to figure out what we do while we build it up.
Yeah, we're just own the soundest monetary network known to man, and the U.S.
Well, you can, but that's going to affect the timeline. I mean, you should, but this whole the physical restraints of power generation are going to affect the timeline of how quickly we experience the abundance and payoffs of it all.
That's a good point. So you guys got to find other ways to generate power. I'm sure there's ways that we haven't
used like
AI yet that will be.
I think that's kind of a pipe. Like I think it does come down to brass tacks if we just have not like our manufacturing base and everything we offshored. Like we're going to find out what that really means when we're trying to keep up with AI.
We're going to experience that hurt for sure.
A little bit, yeah, or a lot of it maybe. But Trump released like an AI strategic vision and like all the stuff in the One Big Beautiful Bill, and like all the stuff, like the bonus depreciation for like, and even more for like special sectors. Like the growth and unlocking the deregulation of everything that's coming is purely driven at increasing this sector, because it ultimately, when you get down into the layers of it, like it becomes a national security, national defense level issue, right? Yeah. If we just lose massively to other countries that are technically our adversaries, like China, like the U.S. and the government and the status quo over here is going to do everything it possibly can to not let that happen. So what that means is that Bitcoin is going to like a bazillion, I think is what that means. Like commodities are going to surge, manufacturing is going to come back. They're going to do everything they can to deregulate and like get all this going as fast as they can. And I think Bitcoin, and I'm fairly certain, strongly convicted that Bitcoin captures all of that.
Well, it's the whole idea that all roads lead to Bitcoin. Right. And there's these two main schools of thought between like, how do you fix this national debt? And then you add on the fact that we have to build all this infrastructure in order to capitalize on AI, right? And we're competing with all these other countries to do that. It's hard not to see a way that they don't print their way out.
Oh, we do 100%.
You have to.
Did you see Maller's clip? Yeah. Did you see Maller's clip this week that he basically has a hypothesis now that the U.S. is just going to inflate Bitcoin digital assets to the moon to like not make your egg prices go up?
I did not see that. I need to watch that.
He basically had it was a segment from his podcast. Basically, like if you look at it, everything, zoom out, look at the yarn string map on the wall, like Trump's personal investment into Bitcoin, his son's personal involvement in Bitcoin and crypto, the acts that they're pushing through, like the Genius Act and the Clarity Act, and then it ties into the AI infrastructure. Like the way that they're going to increase the base money of everything is going to be just to inflate the heck out of digital assets to take pressure off everything else.
Well, I think he's setting the stage, right? Like all of this is just a giant play so that he can do it at the right time around the midterms, right? And get everything 100%. Set up so that he can eventually cut rates. Getting Powell in the right position so it looks like and he's going to send asset prices to the moon. I mean, it's just crazy to think about because like the stocks are.
We can't afford not to. We can't. Yeah.
But it's all. Eventually, like down the line, there's going to be a world of hurt when there's a reckoning there, right? Because inflation is always going to come reaping for all that money printing. And you look at the S&P 500 being at its all-time highest market cap ever, and you look at what most of these companies do, and it's like if you equate what they are like in real value, all of that is just paper too. It's all just like there's not real value there. That's eventually going to get eaten up. And the vast majority of people, that's why we're trying to help people, is like, you think you're safe by investing in the stock market in the S&P 500. And it's like, that is not, it's at its highest risk potential ever. If you look at like the Buffett index, which basically takes into account what the total stock market valuation is divided by GDP, it's 2.5 standard deviations above what the norm is. Yeah. Meaning it's basically a fancy way of saying stocks are massively overvalued at this point in time.
Right.
We're trying to say Bitcoin and Bitcoin companies are massively undervalued. That is the asymmetric trade. You're actually taking the riskier betting on an S&P 500 portfolio than you are using a 1 to 5% Bitcoin in your portfolio.
Yeah.
And I don't think the average person understands that. And
I think it's a generational change of what the winners are. On like the Mag 7 is not going to be around when my kids are approaching my age and like caring about money. Like it's just going to be a totally different set of names.
well, look, 40, 50 years ago, look how much the world has changed.
Yeah.
Right? Imagine trying to pull out one of these. You go back in time in the 1970s, and you take a picture of somebody at the beach. You hand it to them. Hey, can you take a picture of me and upload that to my X portfolio, X page?
But I think it's just accelerating. The acceleration rate is increasing so much.
Yeah,
Like
it's
back to the AI thing. Like
Metcalf law.
we doubled the AI token usage, which is like just the compute and like ultimately the electricity usage in the previous 12 months. As of May, this came out in May. The 12 months prior to May, we doubled the usage of electricity and compute power. We've already doubled it in the 2 months since May.
Wow.
So the doubling rate went from 12 months to 2 months.
Yeah, it makes you, and that was since May.
Since May.
Yeah, that's crazy.
Like that's how much electricity we're going to run out of, and how fast we're going to run out of it, and how fast things are moving. And that whole scale of what's growing is increasing the knowledge and the productivity that much faster every time it gets better.
Yeah, I mean, it all boils down like if you fix the money, then you can have efficient allocation into this kind of stuff that matter, right?
Yeah.
Like you said, we need to improve the grid infrastructure and generate more power. You're not going to be able to do that on a dollar-based system because you're just going to the play is basically we haven't even started true nation state adoption, right? And there's so little Bitcoin left on it, but like the U.S. needs to accumulate as much Bitcoin as it can because then that's true self-sovereignty and letting them do that, right? And working towards building that infrastructure, because the second they start printing money, they're going to accumulate the wealth via Bitcoin on their balance sheet for the money that they're printing. And that's going to enable them to improve the overall infrastructure. That's going to hurt everybody that's holding dollars, right? And holding what we call the riskier fiat assets. But that's the whole point. You can see the direction that this is going to play out. This is the all roads lead to Bitcoin, right?
Yeah.
Do a recap. Like, what are you taking away? Where are we moving forward?
I think we're going higher. I mean, I think Saylor is going to buy $2.5 billion of Bitcoin this week. His deal closes on Tuesday. The White House is going to come out they're not going to put out a negative summary on crypto and assets after they just shouted from the rooftops how we're going to be the crypto capital of the world. Like I would expect nothing but bullishness from that. Are they going to buy from it? Are they going to announce some kind of buy? Like probably not. I would bet that Bo Hines and team like announce a couple of budget neutral ways that they've been looking at, like putting some names to all of the rumors. I would hope that they quantify how much Bitcoin we have. That could be a sell the news kind of event. I don't know.
Yeah, it'll be interesting to see what the plan is moving forward for how they're going to accumulate Bitcoin, right? Because that was obviously in the ideas, and especially with them believing in the asset and him saying, never sell your Bitcoin. That has the fundamental belief that there's inherent value there that they want to accumulate. I mean, Scott Besson said like a week ago that Bitcoin is the most interesting topic to discuss and one of the most important issues to discuss nowadays, which means he clearly gets it. I think another big thing we didn't even touch on that I'm sure both of us have independently seen but haven't talked about yet is that post that talked about the cycles, right? And how there's traditionally the 4-year cycle, and some people are now of the theory that is going away. There's pre-ETF era and there's post-ETF era, and there's that really nice chart where somebody kind of explained how it's no longer going to be those massive surges and then those 70-80% drawdowns. It's a slow, boring, like we talked about, boring being 20, 25%, 30% CAGR, and it's just going up, and there's no more crypto winner. And it's hard. I don't want to be the guy saying it's never going down again, but we just haven't had this type of demand come in. Like we talked about, we just ate 80,000 coins in the market like it was nothing. And
but it's fundamentally different.
People like to say, this time you don't want to say this time is different, but this time is fundamentally different. Absolutely.
Well, I think it's fundamentally different. And I want to say why is that we should be approaching a downward pressure on global liquidity, just with the natural business cycle. And if you look at the average of how much debt people take out and when it matures and has to re-roll, but the U.S. fiscal situation, how much debt we have overall and how we're not able to service it anymore, is moving that timeline further and further out to where we're basically decoupling from the traditional 4-year halving cycle. In the past, it lined up pretty closely with global liquidity rollover. So I think we had thought it was related to halving much more than it was.
Yeah.
But the reality, I think, is we're decoupling from that, and we're going to ride the global liquidity issue. And the bottom line is we can't afford to not bring interest rates down. because we can't afford interest payments on our debt.
We literally can't.
Like we've reached a breaking point. Yeah, we literally can't afford it. We've reached a breaking point that's going to structurally force rates to come down, or because we're not going to hard default, right? We're gonna inflate away.
No, that's what inflation is, right?
It's
It's a soft default.
Yeah, we're going to inflate away the problem, and it's going to push the global liquidity cycle a little bit further, like into next year possibly. And then so much can change so quickly now. I think the certainty that you have of those cycles even goes down. But I think we're going to start seeing we're going to start caring about the effects of global liquidity and then the adoption cycle, which
we're way early in
the a lot with the halving cycle and price, but I think it's more to do with price. And now that the price is going to be pegged to global liquidity, the adoption rate is going to shift also a little bit.
Yeah, and adoption rate's obviously the demand driver, right? But I think the interesting part is like there's the demand side and the supply side, and the demand side has gotten so heavy that you now almost have like artificial halvings that will theoretically start happening when you have these treasury companies and potentially governments that want to buy so much. It's like you're eating into future halvings.
Yeah.
Right. So what happens when there's none left? I think this can be a very, very interesting week. I'm very optimistic about the strategy stuff at the end of the week, and my eyes will be glued to paying attention to what comes out of that national announcement. I think the beautiful thing about it is either way, right? You either look at it and you're like, oh, good, they're getting it. They're buying Bitcoin. Like we're going to be okay, right? That as Americans. Or you go the alternative and you're like, oh man, they're not buying Bitcoin. They're not going to make it, but we're still going to be okay because you're the one that's buying.
Like it doesn't. My conviction doesn't depend on them being bullish news out of that.
Oh, that's what I'm getting at. Is you're good either way. Your basket is protected. I don't want the U.S. government to buy Bitcoin to pump my bags. I want the U.S. government to buy Bitcoin so that it can securitize the country, and we have the United States of America as like it's the number one power still in the next 100 years, right? Or you said we're going higher?
Yeah, we're going higher. That's the official close.